Good morning, everyone. Today is Monday. It is September the 18th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzig Pro platform. I am so happy to be back. As many of you know, I have been traveling in Tokyo. I am suffering from an epic jet lag and some kind of bug that continues to hang out, but I'm excited to be back in the space. Let's give you a little bit of a backdrop. This is a very macro-intensive week. We've got the ECB, the BOJ, the BOE, the Bank of England, the Bank of Japan, the European Union Bank, everybody talking about rates getting raised. And Wednesday we have an FOMC meeting. There's about a 98% chance that we do not raise and we hold steady for another round. The problem is that after this September, I don't think we have another meeting until November. And if the numbers get too hot, things might happen. But core PCE, outside of the things that we actually spend money on, is kind of steady. And so that is the marker that I suspect traders and indeed the Fed will look at and say, you know what, we're going to hang out here. We're going to say higher for longer versus higher right now. Or at least this is the expectation of everyone. So that being said, last Friday we had the largest amount of options expire ever. I forget the number, it's in the trillions. And that when a lot of options expire, the markets stop being pinned in certain regions. So that means volatility might open up quite a bit more. Let's look at the quarterly formations. We can see from a quarterly formation that volume is moving down. Now, that being said, we just are at the end of this particular quarter because October, November, December will be the last quarter of the year. So we are finishing September. Let's take a look at what we've had. Every single quarter, we've had higher lows and higher highs. So this gives us a trend that says, hey, listen, the dip is going to be bought. So how big can the dip be? And so if we take a look at where are my lines? If we take a look at the number near 4293, that seems like a baseline event. This is me stretching to the other side of my desk, so my voice is further away there. I'm going to write that down. 4293 appears to be some sort of base floor. I don't know if it really is going to be. To be honest, my thought process is as long as we don't lose the low of the quarter, we ought to be pretty fine. And that is 43, 48, something like that currently. 43.50. Okay, so that's going to be the number that we are looking at here in the ES. If we want to take a look at what the let's go to the monthly, right? We saw the quarterly. Let's take a look at the monthly. Now, inside of this monthly quarterly formation, right? September, August, July. This is the current quarter in progress. We have an inside candlestick formation for the month. We have not hit the lows of August, and we have not hit the highs of August. So what this tells me is there is a battleground. Remember, we look at the candlestick in motion and 2 candles to the left. What we're trying to do is recover the close of August's candle, and that close is 45.16. If the market has got selling pressure, we're going to breach this and then not be able to hold it. So that 45.16 area is going to be super important. Okay, now what this is going to tell us is what the traders have on their minds in general. right? Now, for me, I'm going to look over here and see this baseline is coming up to the top. So the high end of 45.66 is going to be the region that if the traders get up over 45.13 and hold that area and breach up through that 45.20, they're going to want to push in here to give it a little bit of sideways motion, and that is going to end up being a good thing for the quarterly close. Remember, September is notoriously difficult in terms of being able to hold its pressure, and so there are going to be people that are going to be selling these bounces. Other than that, people are not going to be taking size in great fashion simply because we have so many decisions, and the FOMC meeting or the FOMC release would be on Wednesday. So that's very, very important. Let's go to the weeklies, see what's happening here. Now, from a weekly perspective, what we can see is there's a bid under the market, right? This is my ribbon, my 620 ribbon that I like to use, the MA Cloud from TrendSpider, and that's giving us a floor, right? So we have a bid. Here's the problem. Every time we try to break higher above that 45.50 area, we can't do it. And if we do it, we lose it immediately. So that's going to be a number you have to take a look at and say, all right, if I look at 45.50, we haven't been going higher. So if we do go higher, that means we're going to go up into these higher levels near 46.10, right? The pressure up is still showing. Now, where are we in relation to last week? We're sitting just above the close, 2 candles to the left. If I sit just above the close, here's what's likely to happen. I have a press forward, and then sellers come in at that 45.20, 45.16 area that I talked about. And if they can't hold it, it's going to push us right back down into the candlestick body, which could take us as low as 44.65. That's going to be the week that we look at in terms of saying, hey, listen, if we can't hold this, we're going to fade. Now, this number here at 44.94-ish is super important. That's the, what is that close? Is that 44.98? Okay? Traders are going to battle between that 44.86 and 44.98. So don't trade right here. If they fade, watch them go down to the tight time frame and then watch the formation. Remember, here's how the formation looks for any kind of positive move, right? We'll go here. 1, it fails to close lower. 2, it breaches frontline resistance. That could be here, it could be here. But if we go tight formation, we can say, all right, I breach frontline resistance, and then I pull back and I make a higher low. So that means at the open of this candle, we go long. That's how it goes no matter what size these candles are, whether they're 1 minute, 2 minute, 3 minute, 8 minute, 42 minutes, whatever. That's going to be how it looks. Fails to hold lower, breaches resistance, pulls back, and makes a higher low. All right, so what's the goal? The goal is, once it makes this higher low, that it doesn't break the higher low. So you're able to stay in the trade, even if you think it's going to wiggle against you. You're able to stay in the trade, and then your first target's going to be here, your second target's going to be here, your third target's going to be here. And indeed, it breaks out and completely collapses. All right? But this is the formation that we will look at every single time. All right, now, why am I focusing so much on the ES? In the Zoom meeting today, one of the things we're going to talk about is how to use futures options, and many of us will have to go to our broker and say, hey, listen, can you approve me for futures? And then you can trade futures options. They don't have any day trading, pattern day trading rules whatsoever. You can trade in and out as long as you've got enough margin, right? And depending on where you go, something like Tradeovate, it's $500 for an ES contract. It's $50 for a micro ES contract. And so you can do a lot with those kinds of things. And I really want to help us out. And we can use the SPY to approximate that as well. But I want to show you what it looks like in the future space. All right, that's enough for me today. This is a long video. I just wanted you to see, learn to count the formations, fails to close higher, breaches resistance, pulls back, holds a higher low. At the end of that candle, wait for the candle to close, you take the long, and then the goal is up here. As long as it does not break the low, or better, your higher low, you're going to be in good shape to continue in the trade. A trader will do much better if they've got patience. All right, I'll see you on the feed.